Welcome to Daily Drive for Friday, March 13th, 2026. I'm Kellen Walker in Las Vegas. Today on the show, EV registrations tumble 41% in January. The auto industry's EV retreat bill hits $70 billion, and the Trump administration sues California over EV mandates. Plus, our own Dan Shine visits Helfman River Oaks CDJR in Houston, where sales manager Blake Helfman is excited about Stellantis' product refresh.
Jeep, as you think, is the premier leader in the SUV market space, and to not have a car in that class has been tough over the last few years. So now we're back in that mid $30,000 price point range, where I think, some of our competitors have been very successful.
Let's run through all the news you need to know to keep up in the auto industry. EV registrations dropped 41% in January compared to a year earlier. That's according to S&P Global Mobility. Electric vehicles now make up just over 5% of the market, down from more than 8% last January. Gas-powered cars picked up more than 2 points of market share. Hybrids gained about a point. Tom Libby at S&P Global Mobility calls it a reset after Congress repealed the federal EV tax credit last year. He says it's going to be a slow climb back. We'll have more on this story in a minute with our own Lawrence Iliff. It looks like Honda will pull the plug on the Prologue EV, its only battery electric vehicle in the U.S., when production ends in December. According to industry forecaster Auto Forecast Solutions, the automaker won't build a second generation of the GM-built crossover. The move caps a dramatic retreat. Prologue sales crashed 74% this year after the Trump administration eliminated the federal tax credit. Honda slashed production in half and now expects to sell just 17,900 units. Honda's also canceling 3 upcoming U.S.-built EVs. The company blamed weak demand, tariffs, and profitability challenges, pivoting instead to hybrids. The bill for the auto industry's EV retreat is approaching $70 billion. Honda's adding nearly $16 billion to that tally with this week's cancellations. Add to that write-downs from GM, Ford, and Stellantis, and the sum is pretty staggering. Just 2 months ago, the industry's restructuring costs stood at $50 billion. That included $26 billion for Stellantis and $21 billion for Ford alone. What's notable here? These aren't just canceled vehicle programs. The losses span EV factory capacity, battery manufacturing, and years of development work that's now being written off. Analysts say automakers will keep investing in EVs and batteries, partly to reduce costs, but mostly hedging against regulatory whiplash under a future administration. And meanwhile, the Trump administration is suing California over the state's electric vehicle mandates, saying they violate federal law. Here's the thing. Congress already killed California's plan to ban gas cars by 2035, but the state still has earlier rules on the books that require automakers to sell more and more EVs each year. The Trump administration wants those gone too, arguing automakers should only have to meet one set of federal standards, not California's stricter requirements. And those are today's headlines. You can read more about all these stories at autonews.com. Joining me now to talk more about the story about cratering EV registrations in January is automotive news reporter Lawrence Iliff. Lonnie, welcome back to Daily Drive, sir.
Hey, man, it's great to be here as always.
So, Lonnie, this data is from January, before the conflict in Iran and other developments that could affect the EV market. What should we make of this big drop, and are things likely to turn around?
Okay, so, January is a continuation of what happened last year. The tax credit that goes back to 2009 was repealed in July, then it went away on September 30th, and then we've seen every single month they've gone down and down and down. Now, January, they fell 41%. That's a big number. And basically, what's happening is kind of a structural thing. Big things are changing in the auto industry. And that is that you lose that credit, which was driving sales. And then the administration also got rid of penalties for fuel economy rules. So the carrot of buying EVs is gone, and the stick forcing automakers to buy them is also gone. So, With gas prices going up and everything, I can see like California where EVs are very mainstream. It's just another choice, right? And it could be, oh yeah, that looks interesting. But I think most of the country is going to go to hybrid. That's what our numbers show, is that that's kind of, gaining. It's easier for people to say, oh, gas is going up, but my next car, maybe I'll get a hybrid and I'll get, 30 or 40% better gas mileage. And I think it's going to be a bigger leap going to an EV because of just what I said, the incentives to buy an EV, both on the consumer side and on the automaker side that has to sell them and promote them and give you money to drive them off the lot, is gone.
What are the big takeaways from specific brands' EV sales?
Yeah, it's very interesting because now we're seeing a pattern, and January is a very interesting month in that EV makers like Tesla, right? That's the big EV maker. Everybody associates EVs with them. They were down 26% versus 41% for all EVs. And then the Model Y was only down about 5%. So it shows you that there's still a very core EV market, right? And they like Tesla's. Tesla's market share has gone up 10 points, right? Because people are gravitating to them. And some of these other brands are kind of giving up, right? We just saw Honda cancel 3 EVs, but even the one EV that they have is cratering. And so you really see kind of the strong EV players, Tesla, Rivian, Lucid, kind of fighting it out there in the market. Cadillac's in there too, because they have a bunch of models and they have some commitment. And some of the other ones that are less committed are just kind of giving up, and their numbers are down like 80%.
Wow. Good stuff, Lonnie. Thank you so much for joining me, sir.
Thank you very much.
Coming up, Blake Helfman, sales manager at Helfman River Oaks CDJR in Houston, talks about the excitement around Stellantis' product refresh and how the dealership is using artificial intelligence to improve operations. That's next on Daily Drive.
Are you a dealer creating a workplace culture your employees are proud to be part of? Applications are now open for the 2026 Automotive News Best Dealerships to Work For program. This isn't just an award, it's a chance to get real insight into what's working at your dealership and where you can improve. And we've expanded the categories this year, recognizing everything from technician experience and leadership development to AI enablement and employee retention. The registration deadline is April 17th. Find out more and apply at autonews.com.
Welcome back to Daily Drive. I'm Kellen Walker. Stellantis dealers are seeing a wave of new product after years of limited refreshes. From the V8-powered Ram trucks to the 2- and 4-door Dodge Charger, the all-new Jeep Cherokee, and a refreshed Pacifica. The brand is betting on new metal to gain market share. Automotive News senior retail editor Dan Shine recently visited Helfman River Oaks CDJR in Houston, where sales manager Blake Helfman talked about the product pipeline, how the dealership is using AI to mine service customer data, and his thoughts on Chinese automakers potentially entering the U.S. market.
Blake, thanks so much for joining me on Daily Drive.
Awesome. I'm happy to be here.
So thanks for having us here at your dealership. It's a great place, a lot of great busy service bays going on there. I want to talk, we just kind of, before I push record here, we talked a little bit about this new Texas DMV legislation about registration requirements now in the state of Texas. What are your thoughts on that and how it might impact your sales and business here?
Yeah, no, I mean, definitely could impact us. We're in the early stages of this taking place. We're hopeful that there is a common ground that's coming together. Every day our TADA is releasing emails and guidance on the situation, and we're hoping that they'll come up with more solutions so that more people are able to purchase a vehicle, re-register a vehicle, because, it could present a hurdle down the road for selling and re-registering vehicles.
All right. So 2026, at least for new vehicle sales, SAR looks down a little bit than in the past. What's your outlook on business for 2026? What are you kind of bracing for?
Well, we're super excited. At the Stellantis brand, we've got a lot of new changes coming to the front. We just came back from NADA a few weeks back, and the manufacturer released quite a few new vehicles and is going to release quite a few new nameplates to us, which is super exciting. Haven't had a lot of I guess, refresh product over the last couple of years. Especially we were headed down a path of electrification. Now we've pivoted back and we've come out with the V8 trucks. We're coming out with performance trucks. Dodge is back with a 2 and 4 door Charger, which is super excited. We now have a refresh Pacifica coming that we're now able to order. Ram announced yesterday the Pro City's coming back. And then on the Jeep brand, we have an all new Grand Cherokee that hit, an all new Grand Wagoneer that hit. We're going to be seeing a refreshed Gladiator and Wrangler over the next 2 years, which is exciting. The Jeep Cherokee is back. So super, super excited about that segment. Jeep, as you think, is a premier leader in the SUV market space. Yeah. And to not have a car in that class has been tough over the last few years. So now we're back in that mid $30,000 price point range, where I think, some of our competitors have been very successful. The Compass is redesigned and back. So we've got a lot of new, really good things going our way for 2026 that we're super excited about.
And new leadership as well.
New leadership as well. Yes. Antonio Filosa has done a great job at the helm just in a short time, but, made a ton of changes, a lot on the product side that we hope are going to drive incremental growth over the next year. And we've already seen quite a bit of it. And, we've got a lot of incentives that just hit even too over the last few weeks. So the brand is definitely committed to gaining market share, and they're doing so through product and current incentives.
For consumers out there, I think, affordability has been kind of the buzzword that we hear a lot about. We heard a lot about at NADA. How do you combat that for those folks who have been on the sidelines? I think sticker prices may be a little bit too high. The incentives have not been there of much for in 2025. Interest rates have moved, but not greatly, but a little bit. How do you get folks in the door here and convince them that they need to buy new?
Absolutely. Yeah. So, we're fortunate, in our brands, at least recently, the prices have come down. We've had a lot of MSRP adjustments over the last 6 months to a year, which has really helped on the Jeep side. On the Ram side in particular, just yesterday, they announced 84 months at 4.9% and no payments for 90 days. So, two really significant incentives that help the consumer out from an interest rate perspective, and then also a delayed payment perspective as well. And then in addition to that, they're also offering rebates on top of that. So I think the factory recognizes that they need to step in and help as well. And they've done so, which has been super exciting. So we've got Ram Truck Month going on right now. So all these three, combination of incentives should really help to drive truck sales and affordability.
Okay. One other thing we heard a lot when you were at NADA as well, AI, artificial intelligence, and how it might fit into dealership operations. For you guys, how have you kind of approached this? Are you deep into it? Are you not so much? What is your kind of thinking on artificial intelligence and how it might help you in the everyday business here?
Yeah, it's huge. Micah, actually our service director, and I talk about it every day. And then along with the sales guys, we're sitting on so much data as a dealership, and how to take that data and convert that is the big challenge. So whether it be something like software updates and recalls in the service department, and how to reach out to those customers in a timely fashion in at a very high speed, we're working on that, trying to be more proactive on that front in the service department. So we're working with a lot of AI companies to try to get customers in quicker, follow up with them better. And then, communication as well. We have a texting platform that we implemented in the service department. One of our biggest complaints was a way to communicate to and from our customers. And so now that we've opened up a text line of communication that our BDC manages, it's been really smooth in the communication front there. Artificial intelligence, we do a lot of equity mining in the sales department, finding people that are using our service department and are in a good position in their vehicle, and then trying to reach out to those customers from a sales perspective. That's been huge in the artificial intelligence space. And then, the little things like, we try to reach out to everybody via text messages to offer them a trade-in value on their car that come into service. So that's been, we're working with a few companies on that route. Yeah, it's hitting us daily with new changes. Yeah. So for us, it's great. It's new opportunities for us that we can take advantage of in the dealership space. And it's an opportunity for us to become more efficient as well.
In regards to staffing and retention, turnover, it can be an issue at dealerships. How are you as far as staffing goes and retention? And if you're doing well, how are you keeping folks here?
I think the big thing is our ownership is private. So my grandpa started our dealership group in the early 50s. And my dad is now the president of our auto group. And we have family members that run each location and have been there for a long time. And I think when you have leadership that's been in the same place, you're able to keep a lot of the same people. And I think that truly is what drives retention inside a dealership. When you have a lot of turnover, it's difficult to keep the same people. So I think, I think strong leadership at the top, and I think consistent leadership as well. When you don't have a lot of turnover, that helps.
And finally, I want to maybe talk a little bit about Chinese vehicles. They're going to be in Canada. They're going to be in Mexico. They're going to, have the U.S. Surrounded a little bit. What is your view on China vehicles either coming into this market, and whether you see that as a potential threat? Was it something that maybe you would want to, if an opportunity came up, that you could sell Chinese vehicles?
Yeah, we're in the business, obviously, of selling cars, and, our brands have shifted ownership over time, whether it be, the United States owning us, or the Italians owning us, or the French owning us. And so we've kind of moved, with respect to the Chinese coming into the market, obviously that's a political decision and not in our wheelhouse necessarily. But, I think, hopefully our manufacturers are watching what they're doing, their technology, their quality, and trying to compete with them, at least for right now. Mm-hmm. It seems like everything I see, they make really good looking vehicles, but is that what our market wants? I don't know. I think that the majority of our customers want affordable vehicles. So I think that's the biggest thing. Yeah. And is affordability through electrical vehicles, or is it through gas and hybrid? Right now it seems to be that hybrid and gas vehicles are a lot more affordable than an electric vehicle, especially that the government's not subsidizing a lot of that price and payment. I hope that, the manufacturers that we have franchises with will continue to watch what they're doing, and not just them. There's a lot of other, I know a lot's to be said about the Chinese, but there's a lot of other automakers and countries that are very competitive in that space. Mm-hmm. And, our brands are competing with them right now head on in a lot of markets in foreign countries. That's the benefit of being with Stellantis, is that right now they're competing against these Chinese, whether it's in Europe or in Asia or in South or Central America. We're already going head to head with these guys, and Ford as well. We have a Ford store also. So I know that, they're watching them closely.
Yeah. Blake, really appreciate your time.
Yes, of course. Absolutely.
Thank you.
Thank you so much.
That's Daily Drive for today. I'm Kellen Walker. Thanks to Automotive News executive producer Jake Neer, as well as our own Lawrence Iliff and Lindsay Van Hully for their reporting for today's podcast. You can get the latest news on EV registrations, Stellantis' product refresh, and everything happening in the auto industry at autonews.com. Come back over the weekend for our Weekend Drive edition of the show. Our own Michael Martinez and Lindsay Van Hully talk about the biggest stories from the past week, including the staggering $70 billion bill for the industry's EV reset.
I think it's a sign really of just this broader reset that's ongoing, and everyone sort of taking this view of how much space and how much capacity do we really need right now.
We'd love to hear from you. Let us know what you think of the show and the topics we cover today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoyed the podcast, remember to like, leave a review, and subscribe so you never miss an episode.